What are we expecting on these stress tests?
So what we're expecting, because of the financial crisis, every year now the banks have been going through these stress tests. We're going to receive the results on Thursday, known as DFAST, Dodd-Frank stress test. And so I think what we're going to see is almost probably all of the banks will pass the quantitative part of the test. And that assumes a dramatic decline in the economy, and what type of losses do the banks take, and do they have the capital to absorb those losses?
So you said almost all the banks. Is there a question about any of them?
Well, we would say that we always want to be a little cautious, because historically there's always been a bank that fails. Traditionally, last year was the first year that we didn't have any bank fail, but traditionally the new banks that come in sometimes struggle with the test, and we'll have a few newer banks this year. Some of the foreign-owned banks will be part of the test this year.
And how's Wells Fargo expected to fare? Because there's a Bloomberg piece out raising at least some questions about Wells Fargo.
I think you bring up a good question, because quantitatively there's no question that they're going to pass. So quantitatively we think they'll pass, but there's a qualitative portion of the test which will come out in next week's announcement on the 28th, when the Fed allows the banks to distribute dividends and buybacks, of whether the controls and procedures are very strong. And so Wells, I think there's an elevated risk. We're not saying they're going to fail, but there is certainly an elevated risk qualitatively they may have trouble.
If the stress tests are tougher than they were last year, how can the banks give out more money? Are they just that much richer?
I would say the capital is stronger rather than richer, but I get your point. So yes, the banks are very strong. And so I think what you're going to find is that the economic decline was more severe this year in the test, but more importantly, the drop-off in the Dow was 65%, and typically it was 50% in the test. So the capital market banks actually are going to, I think, struggle a bit. So we think Morgan Stanley and Goldman Sachs will give back less this year. They'll pass, but they'll give back less because the test was tougher.
Interesting. And that also brings up how much money they wind up having to do other stuff, like make loans. Yeah. So come inside the Bloomberg here. This is a core bank loan growth, and you can see that it's falling. This is from George Perks over at Bespoke. The 3-month annualized core loan growth is that blue line, and the white line is basic core loan growth year on year. Catherine, where are the loans?
This is not what my business is, so. But I think there is a question. What we do see in terms of small businesses wanting to take out loans, wanting to undertake expansion activity, and FIB is very clear that small banks and small businesses are on track for a very good year. So I'm curious as to what that particular diagram is picking up, whether or not core loan is representing autos, whether it's representing housing, where there are some other issues.
Alex, if I could add, I would say two things to that. First, to Catherine's point, the smaller banks are growing their loans actually quite rapidly. The larger banks are the ones that are not growing the loans as quickly. And what's happening is the capital markets are taking away the business because they're more competitive. So when we look at the weekly loan data, what you can see is the smaller banks are growing high single-digit rates of growth, which is strong in an economy that's growing at 3 or 4%, but the large banks are only growing 3 or 4%. So there's a real dichotomy going on.
What we also saw, talk about dichotomy, is Jefferies, which is sort of a precursor to big banks, talking about trading slipping further, investment banks speeding up, which really goes to what you're talking to in terms of the capital markets being really healthy.
Yes, correct. And I would suggest to you that the first quarter markets business was very strong, as you know, for all the players. Investment banking was a little weaker, but investment banking this quarter should be pretty good for all of the big investment banks, the DCM and ECM business in particular.